The S&P 500, the Nasdaq, and the Dow Jones are all in the green here today, as we got better than expected data from Bank of America, who reported their earnings this morning, as well as Citigroup, both of these major banks reporting better than expected on their earnings, which I find especially ironic considering yesterday Bank of America put out a message saying to short the S&P 500 as global investors shift to safety. And that brings me to the question of the day: should you short the S&P 500, which has had a really strong bounce back in the last few days, or is this one big short squeeze ready to happen? Well, for this, I think we need to take a little bit of a higher time frame context perspective on the S&P 500. And I gotta say, if you're looking to get bearish on the S&P 500 around this area, I actually think that that is a logical short setup idea if you are bearish on this market. Let me explain. In recent weeks, we've had incredible pessimism on the market. We saw the put to call ratio go absolutely crazy, and the volatility index got all the way up to 60 for a very brief period of time. When the VIX is doing this, historically speaking, this is actually a pretty terrible time to try and short the markets or sell the markets in general. But now that the VIX has cooled off a little bit and normalized, and we see the put to call ratio still elevated, but at least relaxing a little bit, perhaps for those who are bearish on the S&P 500, the risk to reward gets a little bit more attractive here. Now, I want to be clear, I am not personally bearish on the S&P 500, but I want to talk about a constructive short setup that I think could be interesting for the bears. From the lows, we had a bounce back from the low to the high here of about 14%. And if you're somebody who sees caution ahead, basically uncertainty around tariffs, and you think that there could be some ugliness to come, I think that this short setup that I've just marked out on the chart is a lot more appropriate than what we saw last week and the week before, which was people in pandemonium panic selling their portfolios and shorting the markets as the put to call ratio and the VIX skyrocketed. What I'm saying is that I have a lot more respect for bears who are looking for a healthy pullback in a downward trend to look for short side continuation than I do for people who were just giving in to the panic selling and trying to short the market at the worst possible time. If you were watching the channel during this time, then you will know I was pretty obnoxious about the put to call ratio, quoting over and over that it was reaching extreme levels and that very unlikely were bears going to get paid out and most likely a snapback would occur. And that is exactly what we saw happen. So you might be saying, well, so Nick, are you actually bearish at these levels? And the answer is no, because I do think we have to take into consideration some higher time frame analysis. And I'm talking about taking a look at the weekly chart, which I would argue is still in a long-term upward trend. Take a look at the moving averages here, and we barely missed the 200 weekly moving average, tagging the 100-day moving average and actually bouncing off of this level. In the long term, this actually looks like a pretty good, healthy correction that we needed very badly, but could continue to see this overall bull market take place. Bull markets historically last several years. In fact, I saw somewhere, and I don't have the stats in front of me, so please do your own research, but I believe it's somewhere around 3 to 5 years is the average length of a bull market. And we're about 2 years in to the one we are currently seeing. So the answer is no, I'm not looking to short the market according to Bank of America's advice. However, I am looking at this area and saying, this is probably where, if the sellers are going to step in and we are going to see fresh lows in this market sell-off, this would probably be the area based on historical price action. We have a key level of support now testing as resistance. But part of the big reason that I'm definitely not bearish on this market is that last week we had really good inflation data. Take a look at the consumer price index year over year, as well as the producer price index, which came in much better than expected, much lower than expected specifically. And although we've had some volatility in the 10-year treasury yield, the overall trend still seems to be to the downside, suggesting that the Fed may be able to cut rates. Additionally, the panic that we saw during this time triggered a pretty quick response from Trump and his administrative team. Those two things tell me we have a Fed put and a Trump put. And what this means is that if the market panic sells, both the Fed and Trump seem willing to step in to try to do something about it. That cushions the downside. That's why they call it a put, which is a bearish bet you can make on the options market to protect your risk. And when we take a look at some of the latest labor statistics, we actually saw a really strong jobs report come out for the month of March. You can see we had 228,000 jobs compared to the forecasted 137,000. An unemployment rate at 4.2%, and somewhere around 4% for the last few years, has shown that the labor market is very strong in terms of a historical record, which has averaged somewhere around 5.7%. So overall, I see an economy that seems relatively resilient. We have bank earnings that have been showing some positive signals, and we have a price action perspective that is starting to bounce back. Another major contributor is that the Dow Jones, the NASDAQ, the Russell, all three got heavily accumulated by institutional money, according to the latest commitment of traders data buy and sells indicator that we have on the Edge Finder. So institutional money, according to the CFTC, has been in there buying some of the indices and equities that are on sale right now. And that is what brings me to the Edge Finder's top setups algorithm, which shows the NASDAQ is actually currently getting a very bullish reading. So if anything, I'm not interested in shorting this market, but there is something that I'm very interested when I take a look at the NASDAQ. I am looking for actually the sellers to fail out here and for us to see something like this, a breakout of key resistance, just kind of smacking the bears in the face, and then the continuation play. Now, again, I don't know that's going to happen. Sellers may take control and push us back down from here. But if we see this scenario, I am looking to be an active buyer of the NASDAQ specifically. I think the headlines did a wonderful job of spooking the masses once again, convincing people to sell or short the market right at the worst possible time. And if you'd like to get access to the indicators that I use, the Edge Finder is currently 40% off. It's our biggest sale that we do all year long, and we're celebrating 3 years since we launched this product to the public. If you'd like some more information about how you can get access to the Edge Finder for your own analysis each and every day, like you see me doing in my videos, consider checking it out in the description down below. Additionally, you can see right here that if you send us a direct message using the first link in the description down below, or navigating to a1trading.com and starting a live chat in the bottom right-hand side of your screen, you can get 45% off for a limited time by speaking directly to a member of our support team. The reason that we do this is so that you can ask your questions to a real person and we can make sure the tool is a right fit for you. We're not here selling a holy grail or anything like that. These are just powerful indicators and metrics that can give you more insights on the markets before you make trading decisions. So other signals that you'll see on the Edge Finder right now is that gold is getting a very, very bullish reading. The euro is also strong, and the pound dollar. In terms of gold, I'm already long this one and have my stop loss trailed below this level of structure. So basically, if we do see this market reverse and hold this area, that is perfectly fine. I'll continue to hold the position. Otherwise, if we fail at that level, I'm going to take profits on this trade that I have on gold and have been in for 1, 2, 3, 4, 5, 6, 7 days now. I'm a swing trader, so my best trades actually tend to take, upwards of a few weeks when they really run and I can really just keep trailing a stop loss. Taking a look at the euro, we are a bit stretched to the upside in my opinion, and I'm not looking to short this, but if we do see a pullback on the bigger time frames, I'd be looking for a possible opportunity to rejoin my long trade. If you've been watching the channel, you know that I went long the euro and ended up taking a profit around 112. So I am looking for a chance to re-enter the long idea that I've been in, especially with context and confirmation from the Edge Finder's top setups page. I also like the pound dollar. This one's run away from me a little bit, looking for a retracement back down to 1.29 or 1.27. The dollar yen is a very bearish setup on the Edge Finder currently, and so I'd be looking for a retracement on this one for a possible short setup in continuation with this downward trend we see on the daily. I'm also watching the dollar CAD for possible pullbacks up into some key levels of resistance. Specifically, this 1.42 level looks interesting for a trend continuation to the downside. Oil is also getting a bearish reading on the Edge Finder. Let's check that out. So I've got this level marked up on my chart. I'm looking for a retracement back up to the 61.8% retracement for a possible short setup. And in this case, I would trade this from a momentum trading perspective. So I'd probably be looking to short it with a tight stop. And if I'm wrong, then get out. But if I'm right, I'll look for a nice risk to reward on this trade and to trail stops lower if it does continue to move. And if you're someone outside of the United States looking for a better Forex brokerage, you may consider checking out 8cap. And just so you know, they have a really cool sign up perk where if you sign up and deposit certain amounts of money into a new account with 8cap, you can actually get the Edge Finder for free. The way it works is essentially if you deposit certain amounts, they will actually buy the Edge Finder on your behalf from our team. If you'd like some more information about that, head over to a1trading.com/8cap. That's a1trading.com/8cap. We'll also leave that linked in the description down below. Gold's so interesting on the put to call. Like we briefly saw people rush to buy calls on gold. Like when this gets really low, people are rushing to buy calls on GLD, which is the ETF that we use to track the put to call here within the software. But now people just quickly relapsed back to buying puts on gold. That's a bullish indicator for me. because again, people betting that gold is overbought, it's going to go lower. That seems to be the sentiment here. And yeah, I think I like that quite a bit. In terms of like a continuation signal, gold could have more upside. Also, I have a CAD Swiss trade. This has been a troublesome trade for me. And when I say troublesome, in terms of margin, this could go on for a long time. I'd be perfectly fine. I have a very small 2 positions on the CAD against the Swiss franc on the long side. I am looking to scale into this trade further. This is a bit of a contrarian play, dollar cost averaging concept that I've got going on with the CAD Swiss. When you're betting on the Canadian dollar against the Swiss franc, you're betting that trade negotiations globally will improve. That's the way I would see it. If you're betting short, you think they're going to worsen, which has been, there's been uncertainty around trade for a while. So I'm on the wrong side of this right now, but I do think we'll swing back the other direction. There could be some nice gains on the CAD Swiss in the long run. But again, I have really small positions on this and willingness to add to that if that continues to sink lower. The Australian dollar, look at this, guys. Kiwi dollar. Oh my goodness. Someone in the chat, I apologize. Who was it earlier? Cheryl's mentioned that, what do we have? She mentioned the Kiwi dollar, right? Why has the Kiwi dollar got some strength today? Is it China? Did Chinese stocks pop? Nope. Not really Chinese stocks. Dollar index didn't really sink lower. Does anybody know what's going on with the, did we get some, because it's not just the Kiwi dollar either, right? It's the Australian dollar also. And is it pound? Okay, yep. But it's not really a dollar bearish move. This is definitely something to do with just interesting. Does anybody have some insight on what's going on with the Kiwi dollar? I've been out of touch on it, but anyways, another one is Euro Pound that I'm kind of watching this one again. Euro Pound spiked way up, almost got up into this area at 87.50. I believe Top Setups Eco page. Let's flip this around. Yeah, Euro Pound, like -3 score on the Eco only comparison. If we get any higher, I'm probably going to take a short on the Euro Pound. Dollar Yen, you have to be careful with this currency pair. It moves like a monster, especially if you're trying to dollar cost average. But if we did get a swing back up here, I may take a small stab on the short side for dollar yen. I'm pretty selective with yen shorts simply because the carry trade is pretty expensive. Like when you're short something like dollar yen, it's very expensive to hold overnight. And as a swing trader, that can really stack up. So I'm really selective with yen shorts. Kiwi dollar still looks incredibly good. Obviously, I wish I had stayed in that idea. I took profits on it, but it's one of those things. This is the challenge of taking profits too soon. Now, again, I use a slightly different strategy for dollar cost averaging in Forex than I do when I'm trading like gold or silver or NASDAQ, etc. Huge move higher here. I bought around this area, went into the red, shot back up, took profits here. It's obviously kept going. But if we do get something like a pullback on the Kiwi dollar, I may look to take this trade again. We've had some pretty upbeat economic data. We can actually look, by the way, with our economic heat maps, we do have New Zealand on the list. And you can see why New Zealand dollar is so strong is you just have a laundry list of higher than expected or better than expected economic prints coming out for New Zealand. Like we had better than expected GDP growth. We had better than expected retail sales. We had inflation data that came in slightly higher than expected, which is strong for the currency. So just something to think about.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.